What's going on, guys? Welcome back to another video. So in this one, I've got another very interesting AMC update to bring all of you guys this evening. So what we're going to be covering in this update here is something very peculiar has now happened on the charts. We've been talking about this for a while, and I honestly think that AMC's kind of picked its direction, at least going into earnings, unless something really crazy happens with the market. Now, when we have seen these indicators kind of fire off on AMC's chart in the past, we've seen some very significant moves to the upside, and I do want to go over some of those kind of targets that we do have, more so resistance levels, not price targets, so that we can kind of better understand what we're looking at going into AMC's earnings report on Thursday after hours. Now, in addition to this, we're also going to be talking about the Ortex data and a little bit of the options chain. But there's another hedge fund that has kind of bitten the dust at this point. They're down about 85% in the first half of 2022. And I do have some things that I kind of want to say about this, and it more so relates to how the financial media and mainstream media really label institutional investors versus retail investors. So make sure you guys stick around till the later half of this video. We're going to be covering that. But before we get into all of that information, if you do enjoy the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot getting this information out to as many people who want to learn. And again, guys, if you want to see more videos like this, make sure you hit that subscribe button and comment down below if you do like the new format of these videos. So getting right into the technicals on AMC right now, we have a couple of interesting things that we need to kind of go over. So looking at this chart right here, we are seeing this 4-hour 1348 cross. Now, previously, when we've seen these crosses to the upside, what was the about or approximate percentage return? So let's just be very conservative with this first one here. If you were playing it by the rules above the 200 EMA, this one was about, to the peak, about 31%. If you go from the actual cross back here, it's actually going to be about 42%, 40% right here. So a pretty significant one right here. This cross up right here, what did we see? We saw about let's see, 18% increase. This cross up here with the EMAs, what we like to call an EMA sandwich, were kind of wound up. So this one didn't look as good. Pretty flat here before it came back down, crossed up, crossed down, then ended up crossing up for that 18% move. This one, decent one back here, as we can kind of take a look and see another about a 10-11% move back here. Again, we can just keep going down the list on these 4 hours right here, all the way up here. This one's 32%, and then we go back to the big one back here where we went on that significant run all the way from about 1590 all the way up to 34. So these crosses are a pretty good indication of some pretty significant bullish momentum to the upside. But what are the potential price targets or resistance levels that we're looking at as we potentially start to head higher and potentially break this $17 level? Well, this first one right here, honestly, what we're really looking at is that previous high of the last run up that we saw a few weeks ago, 1838. But again, what I do want to kind of go over with you guys is we do have earnings after hours on Thursday. Now, with that being said, it's very possible that AMC does get a nice little boost on earnings if the numbers are good and we potentially get some more insight into what Adam Aron's pounce is going to be. But again, if we do end up seeing some, maybe the market not necessarily liking AMC's earnings as much as we would hope, which is a common trend on what we've seen on AMC's earnings in the past, then we could come back a little bit lower. But again, we're most likely going to have that 13 EMA, the 48 EMA, the 200 EMA, and all of these key support and resistance levels in between those levels. So we would still have some room to head back to the upside. Looking at this on the daily time frame too, it also creates a very interesting picture here. So we have this cross up for a little while there. We were hunting that daily cross down, but we're back above that key level of resistance and potentially hunting all the way up to that 200 EMA on the daily time frame, which is right sitting at around $19.18 right now. Now, again, guys, if you do want to get kind of more insight into this strategy here, in all the 55 private live streams we do every month, the learning curriculum, Invictus and Pythagoras, the new algorithms coming, Trader Joe, the one that's out for you guys right now. Again, you guys have seen it in my live chats. People have been coming in and saying they're quitting their jobs to trade with 1348. And right now is the best time of the month to join if you guys are interested. And we do have Invictus and Pythagoras coming over the next few weeks. So if you guys are interested, check out that link down below. If not, perfectly fine. So let's kind of get into the Ortex data over here and what we're seeing on AMC today. So we've got about 18.94% estimated short interest, average cost to borrow 9.68, nothing too crazy here. Max cost to borrow at around 10.7%. So that's kind of what we're looking at here on the Ortex data. What it really tells us right now, and I've been kind of making jokes about this on the stream when people are asking for Ortex data, it's still shorted. They haven't gone anywhere. They're still betting against the stock. Now, let's take just a quick look at the option chain going into the end of this week with earnings to see if there's anything crazy here. We've got about 42,000 call contracts in the money and 2,600 put contracts in the money. So again, nothing too crazy, but if the market makers are going to be hedging, they are going to be hedging a little bit more towards the call side, meaning that they're going to be buying more shares than they're shorting in order to hedge the options that they are selling. Now, I do want to talk a little bit about this one institution that has recently kind of gone down. So we pull up this article right here. This was released today, August 2nd, 2022. The date on the time on this is a little bit interesting here. But again, Business Insider Africa, this was also posted on Wall Street Journal as well. So leverage bets on tech stocks like Shopify and Spotify tanked a hedge fund that was up over 146% in 2020. The steep losses stem from the firm's leveraged bets on technology names like Shopify and Spotify and Kazoo. The losses far surpassed the 20% decline in the S&P 500 during the same period. The technology-heavy hedge fund Marco Partners saw an 84% decline in the first half of 2022, according to the Wall Street Journal report. The firm, launched by Carl Anderson in 2019, had been up 146% in 2020 during the pandemic's bull market. Initially, Anderson's team picked software and internet companies, including Spotify, Shopify, and Unity Software. The firm would only bet on a small number of names, but then ramp up the stakes with leverage, about $1 for every dollar invested, so basically 2 times leverage. Now, here's kind of the whole big picture with this right here. When we take a look at what actually the overall macroeconomic indicators were going into 2022, I'm not trying to be an asshole here, but it wasn't that hard to see. It's Econ 101. You raise rates, the discount rates increase, the tech stocks that they're betting on come down in value because the discounted cash flow models can't really keep up with the present valuations that the current market has, unless their earnings were to absolutely skyrocket and their projected revenues would go up. Obviously, these stocks would go down. Now, what this leads us to is kind of the conversation about smart versus dumb money. Now, retail investors have been really, really good recently, especially the people in our group, at stacking up those kind of base hit plays and really putting the power of compound interest on their side and playing the market in both directions. But if you're a fund that is billions of dollars under management and you're supposed to be the smartest people in the room in smart money, how is it possible that retail investors like us can see clear as day that rate hikes and inflation and the possible recession and the Russia and Ukraine conflict is most likely going to send the market lower, and these institutions just sat there and said, whatever, man, I'm just going to leave my leverage here, these wildly over-levered positions, and just kind of let them go into the dirt? It kind of comes down to the fact that smart money really isn't all that smart. I've said this a lot of times in the live streams that a lot of these people at these firms, they're not as smart as everybody thinks they are. They take on too much leverage. They make too big of a bet. It goes against them. It's the same thing that happens to maybe a retail investor that gets over leveraged and they have to get out of their positions. These individuals right here that were running this fund obviously made a wild mistake. The thing about the financial industry, though, in something along the lines of this happening, and we've talked about this in relation to Melvin Capital, is that the managers of this fund are pretty much done in the industry. How are you then going to either try and get the money back in terms of making it back over a couple of years, or close down your fund and try to do a new capital raise and say, hey, I know I screwed it up last time, but trust me, I'm going to do it better. It just doesn't make any sense. So again, guys, kind of the moral of the story here is these large institutions, they're not as smart as everybody thinks they are. And retail investors are getting a lot smarter. So that is going to wrap up this update on AMC and this whole kind of hedge fund situation that we're seeing right now. If you guys did enjoy the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So again, guys, I'll see you guys in the next one. Peace.